Good morning and good afternoon. Thank you everybody for joining us on our webinar today, where we are going to be talking about the more unique side of self-directed retirement accounts. We really see a lot of what we would consider common or typical investments at Advanta IRA, which would be things like real estate, private lending, and even investing with private funds or private equities. And so that is something that we see a lot of. But today we're going to talk about the less common investments, things that can be invested in just based on their structure, and also the interest that our clients have in these types of investments. And at Advanta IRA, we like to say invest in what you know best. So we really get to see the creative and unique side of investments from time to time. So we'll be talking about that today. My name is Larissa Greene. I have been with Advanta IRA for just over 10 years, and I am joined by my colleague, Corey Daharsh. Corey, how are you today?
Hey, Larissa, I'm doing well. Thank you for co-hosting this webinar with me. I always love this topic because as a younger investor myself, it's really great to see some of these unique things and thinking outside of the box, as opposed to the monotony of your typical stock market investments or, the things that you see everyone doing, especially for a younger investor. Just kind of painting this picture, I think, is really great for our audience, and hopefully you guys glean some nice information and have a few great thoughts come to mind as you're going through some of these things that our investors have done and how you could apply it in your own investment goals and journey moving forward. So thanks, Larissa. I'm really happy to get into this.
Yeah, thank you, Corey. And that's a great point. Whenever we talk about different types of investments and different structures, it's important really to kind of consider that these types of topics are really to sort of get the wheels turning on what investments you might be interested in. So you might not be investing in the near future into Crypts, as one of our clients has done in the past, but it might be just an idea for you to say, okay, well, it doesn't have to be one thing or another. It can be something super creative that you come across, in the future that a self-directed IRA will allow. So we'll get into what is allowed and what isn't allowed, and we'll talk about these unique investments. I also want to point out that we are going to take questions all throughout the webinar. So if you have a question, go ahead and get it typed into the question box, and we will answer them as we go. We do keep everybody muted because that keeps the webinar nice and clean for the recording, but we do welcome your questions, and Corey and I will be monitoring those. A little bit about Advanta. We are a self-directed IRA administrator. We've been doing this for nearly 20 years now. We have $2 billion in assets under management, or I should say we have over $2 billion in assets under management with Advanta. And what we do is hold the account, you find the investment, we help you get it done in the name of the retirement account. We do the record keeping for those assets that you find. We have been sort of leading our industry as far as handling this with an account management service. So what we do is we supply all of our clients with an account manager who is with them for the life of the account. And so once you sign up and have an account with Advanta, you are assigned an account manager, and that individual is with you for the life of the account and can answer all of your questions, from anything to making contributions on an annual basis, all the way through to helping you or assisting you with every investment that you will be making. And I think that's different from a lot of our competitors, and important because that gives you the opportunity to get to know the individual that will be assisting you with your account. We have two offices. We're in the Tampa Bay area of Florida, and we're also in Atlanta, Georgia, but our Tampa Bay area office does handle all of the back office work, including making investments on behalf of clients, and that is where the majority of our staff is located.
And Larissa, just to add to that, for anyone else outside of those specific regions, I'm also personally located in Western North Carolina. I do a lot of traveling and networking throughout Carolina, Tennessee, some parts of Virginia, and South Carolina. So if you're in any of those specific areas and would like to connect personally or one-to-one, you can feel free to reach out to me directly as well.
Yeah, absolutely. And that's another good point, Corey, is we can help anybody anywhere. So we're assisting through using DocuSign, email, fax, and of course mail. And so we can really help anyone anywhere as long as they have a US-based retirement account. You can self-direct that account. Just a quick disclaimer, we do not give any investment advice. We don't provide any tax or legal advice as well. advice as well. We don't endorse any products. Our purpose here today is just to educate you on the different investment types that we see. If you do have a question that, is this the best way to handle this for liability purposes? Is this investment a good return? We might be able to refer you to professionals, but we cannot answer those questions.
So what is a self-directed IRA? Well, if you're not familiar, self-directed IRAs give you, the account owner, complete control of the investment decisions and the funds that you have in your retirement account. There are a lot of different ways to self-direct a retirement account. Specifically today, we're going to cover some of the more unique ones, but we are able to hold assets like real estate, hard money lending, like private mortgages or promissory notes, private placement investments, some precious metals and foreign currency, futures or forex trading, cryptocurrency, and much more, like we'll get into today. If you haven't heard about self-directed retirement accounts, that is okay and actually pretty common. Only about 4% of the IRA and 401k industry in the US is self-directed. So to put that into perspective, I think that total figure is somewhere around 27 trillion right now, and only 4% of it is being utilized through self-directed investing. So not a lot of people are familiar with it. In some cases, that's because the larger wirehouse custodians would prefer you to keep with their managed account and not allow you to do a self-directed investment. That's why companies like Advanta exist and have a high emphasis and focus on education. So you can self-direct more than just your traditional or Roth IRA. Simple and SEP IRAs are also plan types that would work for small business owners, health savings and education savings accounts if you're in a high deductible healthcare plan or looking to save money for your young ones that are going to be going off to college or even private school in the near future. And then another key way that people switch over from previous plans to self-direction is when you've left a current employer, like a 401k employer or a 403b or even a TSP plan. If you're a previous military member, you can easily, without tax consequence, roll over those funds into a self-direct plan and start your alternative investing career. Now, I touched on it a little bit on that last slide, but if you're thinking, why do people even get into this or how? One, it's often a new source of capital for an existing investor that's just looking to get more money to do whatever types of investments they're already familiar with and already high functioning at. So again, a lot of our client base is real estate investors. When you find out as a real estate investor that you can use your retirement money to do your next flip or to lend on the next property you're helping out with, that's typically a great way for people to jump into this type of investing. Also, stock market fatigue. If you're like me and you have an account with a larger custodian as well, and you're just kind of seeing the fluctuation and not going the way of your choice, it's a great thing to diversify your portfolio so that you don't have all your eggs in one specific basket. And you've got some self-directed assets, some unique investments that you're happy with and you're fun and enjoying investing through. And then you could still keep a portion of your retirement savings in a managed account with those types of assets. And specifically, the tax benefits that come with investing in alternative assets through a self-directed account create either completely tax-free or tax-deferred income. So if you're thinking of a piece of real estate, all of the rent is flowing back into that retirement account, either tax-free or tax-deferred, depending on if you have a Roth or a traditional style account. And the biggest benefit, as Larissa alluded to, and I know I've mentioned it as well, is to invest in what you know best. If you're already a proficient investor in any specific lane, category, strategy, the fact that you can do that with your self-directed money is really a powerful tool that I implore everyone to consider and decide if it fits your goals, your needs, and your strategies. Our clients use their knowledge and make their investments. They come to us when they have questions about the rules and regulations, which we're experts in, but we allow our clients to be the experts in their types of investment strategies.
So that is kind of, just a quick overview of self-directed accounts. And so now that we have that kind of covered, we're going to go into the unique investments that we see. And just to give you a quick overview, the IRS allows a really broad range of investments. The only two asset classes that they don't allow are going to be life insurance and collectibles. And so outside of that, just about the sky is the limit. And our clients are typically very creative and very entrepreneurial. And they come to us and they say, hey, would this investment be allowed in an IRA? And I think we always find it very interesting, you know, to hear about these investment structures. And typically it is going to be something that you can do in an IRA. So let's just go over it quickly, and then Corey and I will go into more detail in just a few minutes. But of course, the big one now is going to be cryptocurrency. I think years ago when clients started bringing us this idea and saying, hey, would we be allowed to use our IRA to invest in cryptocurrency? It seemed like a very novel idea. And of course, now it's very commonplace. And so I think over time, a lot of times these investments do become something more common you see in a self-directed account. So cryptocurrency is going to be a big one. And of course, we have a lot of interest in that. We have a lot of people that come to us and say, I want to invest in this type of cryptocurrency or that type. And again, the beauty of a self-directed IRA is that you can make those investments that you choose as long as it's allowed within IRS rules. And so that's not only something that we hear a lot about from clients, but we also talk about it a lot. So if you go to our YouTube channel and you check out our recorded webinars, you're going to see a lot of webinars cover cryptocurrency, and not just cryptocurrency, but blockchain technology as well. So if you're interested in learning more about that, you can go right to the YouTube channel and check out more webinars that we have done specifically on that topic. We have also seen investments in farm animals and in farmland, and I think we go over that in more detail coming up. We've also had clients invest in car carriers, 18-wheelers, airplanes, and again, we'll go over that in more detail. Sports teams, movie projects, and burial crypts or burial plots, and these are all investments. And as long as the investments are being made at arm's length, you can make those investments to grow your retirement account. Again, just a reminder, the goal is to invest in what you know best. And so many of these options might seem like something that would be a difficult investment maybe, or something that you don't really understand, but our clients that are making these investments do really understand them. And so these are the asset classes that maybe their knowledge base is in, or their 9-to-5 job is based in. And so those are the investments that they feel comfortable with for a retirement account. So the first one we're going to talk about is cryptocurrency. And I think that this one, again, used to seem very unique, but is more commonplace now. And so typically the way we see our clients making these investments, there's two strategies really for making investments into cryptocurrency. And the first one that we see a lot of is setting up checkbook control through an LLC. The reason we typically would see an LLC used for crypto investments just simply because the trading platforms are going to be more likely to accept a wire transfer from an LLC that you have control of as the IRA holder versus the IRA directly. It's not impossible to do it through the IRA, and as a matter of fact, as this investment sort of grows and evolves, we're seeing more and more platforms allowing the IRA to invest directly, but the LLC might ease that transaction a little bit. So where you might have maybe 2 or 3 platforms that allow the IRA to invest directly, as you're sort of doing your research, you might find that more platforms, therefore more options, are available to an LLC. And basically the LLC is set up, it is established for the purpose of the IRA. The IRA is the single member of that LLC. The IRA account holder is typically the manager. IRA funds are moved from the IRA to the LLC, and then the LLC can set up a profile with the trading platform for cryptocurrency of the IRA holder's choice. The second option, again, is investing directly through the IRA, and we're seeing more and more platforms accept this structure. So the LLC is becoming less necessary over time, that basically the IRA sets up a profile with the trading platform to purchase cryptocurrency, and then the cryptocurrency is held in a digital wallet in the name of the IRA. And all of that stuff is very important. You always want to make sure that there is a paper trail, so to speak, showing that the IRA is making the investment, that this is not just a personal investment for you, because that is going to make sure that the tax status is maintained for the retirement account. The next investment I want to talk about is farmland and farm animals. And these investments, again, I mean, I think since the beginning of Advanta IRA, we've been seeing these investments, and it's very interesting because if you don't deal in these types of investments, you might find it unique. But of course, our clients that are making them really have a knowledge based around these, and they say, you know what, I don't really understand the stock market, but I do understand the price of cattle, the value of cattle, or maybe the value of racehorses and thoroughbreds. And so that's where they want to put their money. And so we've had clients invest in shares of cattle and racehorses for both racing and breeding rights. We've seen the purchase of bull semen for resale, loans secured by alpaca. And so if you've been following our webinars for some time, or if you're new to this, you may not realize, but the IRS doesn't require that you have a loan secured by real estate when you're doing private lending. If you want to learn more about private lending, you can certainly check out one of our pre-recorded webinars. But the IRS, again, only does not allow life insurance and collectibles. And so they don't say, well, you have to have a first mortgage on a house if you're doing private lending, and this is the interest rate, and these are the terms. There really isn't any requirement based on that. So we have clients that do unsecured loans, for example. They do not have to be secured at all. But we had a client several years ago say to us, well, I don't want to lend this money unsecured. I really want it secured by something. And this borrower has valuable alpaca that we can basically lien in order to secure the loan. And so that lender was willing to do it based on the value of the alpacas. They came to an agreement, and that note basically was put together by an attorney and provided to us, showing that the IRA was the lender in this case, and that the loan was secured by an alpaca and payments were made back to the IRA. So that was a very interesting transaction and something that I think we will always remember. We've also had a lot of clients purchase farmland. So buying farmland and then leasing it out to local farmers. We've also had clients purchase farmland that has orange groves on it. And so I can think of one specifically where the client bought farmland and had orange groves. And so that client approached a local farmer and said, well, if you do this farming, if you go out there and pick all the oranges and then sell them, we will split the profits of that harvest. And so we've seen that done. I've also seen clients purchase farmland and lease it to vineyards. And so there's really a lot of options available when you're looking out, you're kind of thinking outside of the box, looking outside of the box for those investments. So up next, we're going to talk about vineyards and raw land. So one thing that I always like to point out again is that there's very few limitations as far as the IRS is concerned for your investments. And so when you're looking at different investments and asset classes, you can always reach out to us and say, hey, is this something that will be allowed? And although we can't give you legal advice, we could tell you this would be allowed within the rules, or it wouldn't be allowed, or this is why it's a gray area and you should definitely seek legal advice for this investment. So we've had clients invest in a private offering for vineyards. So remember that we talked about the two investments that cannot be made are life insurance and collectibles, and included in collectibles is alcohol. And although we've had clients invest in a private offering for vineyards, they were not investing directly into the alcohol, and so that investment was allowed. Really, the investment itself was a private placement or a private stock or private offering for the IRA account, and so the IRA account could make that investment. Those investments are made within the U.S. and also outside of the U.S., so there's no requirement that says that this asset has to be held within the United States. So we have clients invested here locally in the United States, but also abroad, and so they're invested all over the world really for these types of assets. We also have clients that are familiar with forestry that have used that expertise in purchasing raw land and selling the timber or the timber rights for future production on those assets. And all of this is done through the retirement account. And then, of course, raw land can be held for different types of leasing, including farming, camping, and hunting rights. So we've seen all of these done within a retirement account. And I also want to point out that land can be purchased sort of as a land speculation, if you will, for the investment, because the IRS doesn't require that any income be produced on a monthly basis or an annual basis for this investment. So we've had clients purchase land and say, well, I'm going to hold on to this until it becomes very valuable, and then I'm going to turn around and sell it. And that is absolutely something that you can do.
And Larissa, to that effect, one thing I'd like to add regarding raw land investments is that while it does not need to be income producing while you're holding it in your retirement account, you should keep in mind that you'll need to pay property taxes and other miscellaneous expenses relative to the asset. So just make sure that you're not extending your account too thin with regards to a cash balance in case you do have the tax bill coming up for the next number of years, or any other types of maintenance that may need to be done to the property if it's going to sit dormant. With these types of investments, it's important that you understand that your ownership percentage is basically tied directly to any costs or expenses of the investment in itself. So if you own a piece of raw land 100% in your retirement account, then that means when that tax bill is due next year, that bill must be paid 100% out of your retirement account. Just figured I'd mention that before I jump into this next slide and these next series of investments that we've seen our clients hold. So we've got a slide here with a nice soccer stadium. It is true. I've seen a client invest into a LLC entity that held a minority stake of a world-class sports team. So what that group did was formed an LLC, had a bunch of different investors contribute and build up an ownership profile. And then from there, they used that LLC to invest into the ownership stake of that sports team. Also, in similar respects, I've seen clients invest into breweries, similar to what Larissa referenced on one of her last slides with the wineries. Owning a ownership stake in a brewery is not necessarily owning beer or a bottle of fine wine in your retirement account. So those are not seen as the exact same thing, and these types of investments are allowed. Although, like I said, owning an actual bottle of fine wine that you might consider having a subjective value is not allowed. Coffee shops as well, and even a flour mill company that produces healthy baked goods that are distributed to grocery stores throughout the U.S. In preparing for this webinar, I actually looked up that specific business entity, and I found that their products are distributed at my local grocery store. So I'm planning to go pick up a few when I go shopping later this week. So aside from that, we've also seen clients hold some passive income generating business entities like laundromats, car washes, and self-storage facilities within their retirement account. I make a point to say that these are passive income generating entities because your retirement account should only be making passive investments. So any of these scenarios where they may need an actual rank and file or W-2 wage earner, let's say working at the laundromat or working at the car wash or the self-storage facility, may not necessarily fit into the retirement investing category. There are some workarounds and some ways that they could fit. Those are really just conversations you'll want to have with your Advanta client account manager, who can go through the pros, cons, and different things that you'll need to be aware of if you're interested in those types of investing. And then also one of the rather unique ones, I don't know if we're going to keep a tally of the most unique investment that we've seen, but owning an actual lot in an RV community that is specifically a nudist community. So that scenario was an investor holding that lot and renting it out to different people that wanted to come visit that community for a small or short-term rental period. Transportation is something that you can invest into. Regarding leasing a vehicle, we have seen a non-client with a transportation business need to scale and move a lot more vehicles, but didn't necessarily have the car carriers or the capital to purchase them. So retirement account investors got involved, purchased some car carriers or those modified 18-wheelers within their retirement accounts, and then leased those trucks to the friend with the car carrying business, typically holding a vehicle is not something we see often in a retirement account, but in this case scenario, it's able to be used again for passively generated income through the lease. And that is something that we've seen someone do. And then scenario two here is that you can actually purchase the 18-wheeler, have it upgraded or updated through a third-party mechanic, and then resale after those repairs have been made. So basically the equivalent of flipping a piece of real estate. This just happens to be an actual vehicle rather than an actual domicile or piece of land.
And that's a very interesting investment. And I just want to remind everybody too that there are rules for self-directing your account. And again, those third-party arm's length types of transactions are very important to the retirement account. So if you're going to do something like buy an 18-wheeler or a car carrier in your IRA, you can't store that vehicle, you can't transport that vehicle, you can't do any of the maintenance on that vehicle yourself. All of this has to be done at arm's length. And I think we talk a little bit about the rules as we go on, but if you're interested, Corey and I actually did a webinar on the rules specifically just a couple of weeks ago, and that would be on our YouTube channel as well.
Yeah, thank you, Larissa, for including that. And that webinar that we did a few weeks or a few months ago is a specific webinar to the IRS rules and regulations. So if you're hearing things today and you want to check that out or even contact us directly, please do so. We love having these types of conversations and helping you set your goals and also achieve them moving forward. So getting back on track, we've got an airplane investment. In this case, the airplane was purchased through a single member LLC, which Larissa referenced earlier regarding the cryptocurrency investing. And I think we're going to go into setting up a single member LLC in more depth later on in the webinar as well. But at this point, we're looking at a non-disqualified pilot being paid to fly the vehicle. So getting around those rules that Larissa just mentioned about you not being able to fly the airplane yourself as the account holder holding the asset in your account, you would have to pay the expense for that pilot to also get back home out of the retirement account so that you're not coming out of pocket for any specific expenses or costs relative to your retirement investment. Storage at the airfield or facility should be paid out of that retirement account. But then once that plane is sold to the buyer and the buyer goes and picks it up, all the income generated would be completely tax-free or tax-deferred, again, depending if you're making the investment through a post-tax or Roth account or a tax-deferred or traditional style account.
So another investment that we saw, and this was a lot of years ago now, but I think it's still one of the most interesting investments that I've seen, burial crypts. So we had a client that found an opportunity to buy 2 side-by-side burial crypts, and they came to us and said, "Hey, I was thinking about this. Is this an investment that I can do within my retirement account? They're selling really at a premium in this area, but I can buy them at a discount from somebody who just is looking to be rid of them. And so I'd like to basically flip the crypts and make this investment through my retirement account." We said, as long as you have no intention of using them for personal use, it is an investment that you can make. And so the client purchased side-by-side burial crypts. It is deeded just like real estate, which I found really interesting. And then they turned around and sold them for a profit. And our silly note there is no personal use. So remembering again that all investments are arm's length transactions. So deal structures for these types of investments, and how do the rules work when you're making the investments, and that's super important. Again, a lot of these investments are made through LLCs. They might also be considered private placements or private stock, essentially. You also need to be aware of prohibited transactions and who disqualified persons are, and then the possibility of tax liability, because an IRA can incur a tax liability, and so it's important to understand that as well. Corey was talking about how investments are going to typically be passive, and so when you're making investments, are you a limited partner? Are you holding a minimal share by stock, different structures like that. And the reason is because a lot of times investments can be considered completely passive, but there are times where a tax liability can be incurred by the IRA, and that's just based on the structure of the deal and how income is received by those investments. So those are all things and let me elaborate a little bit, although I think we do have a slide where we talk about UBIT, but the tax liability is called UBIT, or unrelated business income tax. And the two times that could occur in an IRA, one is when you're purchasing using debt. So if you're buying, say, a piece of real estate and you're using a loan to do so, you can do that. The IRS does allow it, but the moving parts are going to be that it has to be a non-recourse loan, and then of course that it does incur a tax liability called UBIT. The other time business unrelated business income tax occurs in an IRA is going to be based on how the income is received by the IRA account. So again, this should not be something where you're running the business, for example, or you're working there as an employee. There may be some exceptions to those rules, and it is possible to maybe start a business using a retirement account, but we won't go into that today. There is a webinar on that Corey just did with our associate Alex that you can check out as well. But typically, there's are going to be investments that you're making at arm's length. But if there is business activity in the IRA, then again, it doesn't make it a prohibited transaction, but then the IRA would incur this business income tax.
Yeah, thank you, Larissa. I love the cross promotion that we're doing on a few of our other webinars. I did just do that webinar on the ROBS plan and 401k borrowing about a week ago with Alex. So if you're interested in that investment structure where you can actually work for the entity that's being funded through your retirement account, please go give that a review and check that out on our YouTube channel. And then jumping into this case study that I'm going to go over here, I'm going to show you how to set up a Checkbook LLC, in this case for the purpose of a client making an investment into a movie project, so film production specifically for this scenario. And if you're interested in checkbook control, I know Larissa mentioned it earlier once, I mentioned it earlier once, we have a lot of different webinars on checkbook control specifically, whether it's the process to set it up, how you can utilize it. It's one of our more commonly requested and approached topics. So the Checkbook LLC is really just a vehicle in itself that gives you more direct control of your retirement money. So in this case study, we've got Joe who opens and funds an Advanta account. He does a rollover or a transfer from an existing account or old employer 401k. We set up the account, we get it funded, and then Joe finds a movie project he wants to invest into. So what Joe ends up doing is setting up the plan and funding the investment into the movie project after reviewing the private placement memorandum or limited partnership documents, executing them in the name of his retirement account. So something along the lines of Advanta IRA for the benefit of Joe Smith and his account number. The tax ID number tied to that investment is Advanta's trust tax ID number, so there's no personal taxable liability or consequence for the investment to Joe directly as the account holder, and the income is sent directly to the retirement account, never flowing into Joe's pocket personally or in any other context to a bank account that Joe has set up, unless it's a checkbook control investment entity. Now, when you're using sorry, go ahead.
This is a really cool investment. We actually had somebody raising capital for a movie project locally here in the Tampa Bay area a lot of years ago now. And we had a client come to us and say, hey, they're doing a capital raise for this, and I'd really like to do it. So we reached out to the capital raisers and talked to them and said, hey, is this something you would allow an IRA to invest in? And they were all for it. So Joe's IRA becoming a limited partner, this is sort of a true case study where we saw clients then, the movie project said, hey, if you're going to allow IRAs, that kind of opens the door for a lot more investors who want to use retirement funds. And so it worked out really well for all the parties involved because they had better access to retirement funds versus personal assets. So I thought that was really neat. And I actually went and spoke at a local film festival and talked to producers about raising capital through retirement funds and what that looks like. And so that was a really unique and really interesting experience.
Yeah, thank you, Larissa. That always, at least to me, and I don't know if this dates me, but it calls to mind The Sopranos and Chris Moltisanti getting into funding and part of the film production. But I don't think the mob has a retirement account, if I'm not mistaken. Checkbook control, like I just went into the last two slides. Um, what you can do is set up an LLC and funnel all of your investment transactions through that LLC. Basically, as Larissa went into earlier, you set up an LLC where your retirement account is the sole member. You yourself and any other individuals you would like to list as managers are listed on that operating agreement as managers. And you basically direct your Advanta account to make the investment into the LLC, send the funds to the bank account you've established at the financial institution of your choice, and then moving forward, you make any of your investment choices in the name of that LLC, whether it's signing into a private placement or a movie funding investment, purchasing real estate in the name of that LLC and deeding title into the name of that LLC, or any of the other strategies we've gone over today. One thing that Checkbook Control gives you is direct access to your account so that you can go to an auction over the weekend or make any other investment with a quick need to access your money. Whereas if you're doing it directly through Advanta, you may be subject to just reaching out to us during our normal business hours. We do have a very quick processing time. Typically, from the day a client lets us know they have an investment in mind or on the table, we can get that transaction funded within 24 to 48 hours of knowing that it exists and having receipt of the investment paperwork. So we are still very quick at doing that, but this control is something that is very helpful for a lot of our investors that would like either more hands-on responsibility or just an immediate access to the funds for auctions or quick closing types of transactions. And again, as we've alluded a few times, the income flows directly back into that LLC bank account. It does not need to come back to Advanta until you as a client want to take a personal distribution of that money, or even move that money back to a managed account with another custodian. If you are trying to spread your diversity out, let's say you're just generating a ton of income in your self-direct account and you want to put a little bit more on the market, those are the only times that money needs to come back to Advanta. Until then, you can keep it in that LLC bank account for any future or current investments that you may be looking to do, or just to have, like I said, that capital set aside for when your tax bill comes up for your next real estate asset or any maintenance that may need to be done on assets that you're already holding. Now, when you're looking at checkbook control, there are a few things that I'd like you to know about or remember, if you will. This is an investment strategy that is supported by case study through the legal system. There was Swanson versus Commissioner in 1996 and the T. Ellis tax court memo from 2013. Both of those items, you can look them up if you want to read them specifically, but they basically support that the government does say holding a checkbook control LLC is a viable and legal investment. As long as you're not paying yourself a salary for managing the LLC, you as the account holder and individual are able to be the manager of that investment vehicle. Again, you can look those up if you'd like to go into more detail or learn more about them, but it's just a point that this investment structure and strategy is supported by a few court proceedings and a tax court memo. And again, the manager doesn't necessarily have to be yourself. It can be a combination of yourself and any other business partners or individuals that you would like to be on the management role for the LLC.
Yeah, and I think that's a good point too, because typically the account holder is the manager, but people do ask us, okay, well, if I form an LLC and it's my IRA and my spouse's IRA in the LLC, can I just manage it, or do we have to both be managers? How does that work? It really is up to you as the IRA holder. So you let us know what you're looking to do, and we can kind of say, okay, this is what we typically see, just so that you can make a decision based on that information. But again, as Corey mentioned, the IRS, has in those two cases, they may have argued, hey, this LLC is controlled by the IRA holder, but the tax court has upheld that as long as within the LLC there are no prohibited transactions and you're not paying yourself a salary, that the IRA holder can be the manager of that LLC. Remember, we talked about prohibited investments. And just keeping in mind again that the IRS says that only life insurance and collectibles are specifically not allowed in an IRA. And so that does lay sort of the framework for a lot of different investments, a lot of structures, and a lot of asset classes. And so that really is sort of the basis of this webinar, letting you know, get your wheels turning, that a lot of investments that you see kind of as time goes on might be something that works in a self-directed IRA. Also, we just want to note here, because we talked about collectibles kind of being antiques and alcohol, artwork, stamps, and coins, that coins are allowed as long as they're based on the value with which the metal is trading. So that's super important there, because a lot of times people will say, well, I hear, people say they're buying gold coins in their IRA. Yes, that is allowed. It just, they can't be gold coins that their value is based on them maybe being rare or antique. So that's important as well. And also very important is that you should not be storing your gold and silver bars and coins for your IRA account at home, because that would really not be considered an arm's length transaction. And so, our interpretation of that is that you should be holding your gold and silver bars and coins with a storage facility. We did have a question pop up about that. What about collectible antique cars? And unfortunately, those are going to still just fall under typical collectibles, and that would not be permitted.
Yeah, Larissa, if I could just expand on that real quick. The way I always explain the collectible lane, if you will, is that it can't be something that the IRS would determine to be a subjective valued asset. So for the purpose of collectible cars, I'm not a car person. So if I looked at a 76 Chevrolet Stingray Corvette, I might not hold the same value as that as a real musclehead car collector. So anything that the IRS would see as a hard to value asset or deemed subjective in valuation, they're going to lean and err on the side of not allowing you to hold those types of things in your retirement account. Ergo, fine wines, antique, artwork, those are types of things that fall into that category. So again, if that's something that you have a niche and an understanding and expertise of, and you're interested in investing into those types of assets, consult with us. We'll talk to you about where the rules and regulations lie on that side.
Mm-hmm. Yeah, and that's a really good point. But you take that investment and you change the structure of it, and then it all of a sudden might become something that would be allowed. So, for example, if Corey had an antique collectible car business where he leases those cars out, and I wanted to invest in his business, then that might be something that's permitted. What if I was a shareholder in that business, or I lent that business money? Then that might be something that would be permitted in an IRA, because the investment itself is the business and not the underlying assets of that business. And so we're going to go on from here and talk about prohibited transactions as far as they're concerned with disqualified persons. So who is considered a disqualified person to the IRA? Well, that's the IRA owner and their spouse, and then anybody up and down their lineal tree. So parents and grandparents, children, grandchildren, and spouses, and business entities of those. And what does it mean when a person is considered disqualified? It means that you cannot transact with that person. There's no buying, selling, leasing, hiring that individual to provide sweat equity for IRA-owned assets. And so that's very important. When you talk about all of these really unique investments, that might come up. So let's say that you are going to buy shares into a racehorse, but the person that ultimately is going to purchase the racehorse and be responsible for its care and upbringing is your daughter, for example, then that is probably going to be it is a prohibited transaction. And so those are things that you want to be very mindful of, especially when we talk about the less common investments, the more unique structures of those investments. I had a question pop up Asking about siblings. If you will notice, this diagram does not show siblings as disqualified persons, and that is true. They are not disqualified. Brothers, sisters, aunts, uncles, cousins, those individuals out to the side of your family tree are not considered expressly prohibited. What you should be aware of is that if there is some intrinsic value for the transaction occurring between you and maybe your brother or sister, then that could become a prohibited transaction. So for example, if I was going to buy a property and lease it out, and I leased it out to some person unrelated to me at fair market value, then that is all set. But let's say that I wanted to lease it to my brother and he had nowhere else to go and he couldn't really pay fair market value rent, but I wanted to put him in there so that he wouldn't have to move far away or maybe live with me. There could be a problem there. This is no longer an investment for investment purposes. So just be aware of that. And there are others that would be considered disqualified too. So let's say I had a friend from college that I made my primary beneficiary. Well, she's not related to me, but at the time that she is becomes my primary beneficiary, that automatically makes her a disqualified person. So here is that slide on unrelated business income tax. I thought we might have it in here. So this is good because we can go over it in a little more detail. Just be aware that unrelated business income tax comes into play in two scenarios in an IRA. And even though the IRA may incur this tax, it does not make those investments prohibited. It just means that you should be aware of this. And at the time that the tax is owed, the IRA will pay it. So it is a burden to the IRA and not to you personally. So unrelated business income tax applies when business income, not investment income or passive income, is returned to an IRA. So I really can't describe this to you any better. Just know that if you're investing into a business and instead of receiving dividends, for example, you're receiving business income, then that is when this tax is going to apply to the IRA. The other time that it applies again is if you're purchasing an asset using leverage. The leverage does mean that the IRA is going to incur this tax. The tax is on the income related to the debt. So for example, if you buy a property and you put 50% down and 50% is leverage, then 50% of the income on that property is going to incur this tax. And there's an additional form to file when you're reporting the tax and paying it.
So we're getting towards the end here. I would like to reiterate, if anyone has any questions, to feel free to throw them out into the question box. I've only got a few last slides, so I'll try to get through these at pace and have you all on your way right at the 1 hour mark. But again, please feel free to include any questions you have before we wrap up, or take down our contact information, which we'll display again in a moment if you would like to reach out to Larissa or I directly. So the key takeaway points I'd like everyone to walk away from this webinar with are that your retirement investments can be unique and personalized and creative. You do not have to limit yourself to just stocks, bonds, and mutual funds like your parents probably did or your grandparents probably did. You can invest into things that you're interested in, things that you have a specific knowledge of, that you can drive a higher rate of return than just a standard asset that you're not necessarily in control of. And in doing so, it's important to conduct your own due diligence and conduct that very thoroughly. Consult with your team of CPAs, tax preparers, legal professionals. Consult with us. We can point you in the direction of those types of services if you need a good referral or reference. But we are happy to help from our side, letting you know what the IRS does allow, does not allow, and how to functionally accomplish an investment goal that you may have for a self-directed investment strategy. And the third takeaway point is that diversity can help protect your retirement account and your nest egg in an unstable market. Again, you don't always want to have all of your eggs in one basket. It's very key to diversify your portfolio. As I mentioned, I do. It's always a good tool to have a little bit of irons in each different fire that you can possibly get yourself a hold of, as long as, again, you've done your due diligence and you have some sort of passion or interest in what you're investing into. These are all things that really should just motivate you to finding that next deal or finding that next strategy that you can really be proud of and happy that you're investing into through your retirement account. So As Larissa and I have given you this webinar, I do want to let you know that most of our networking comes by way of our events and our recorded webinars, which go up onto our YouTube library. You can go to Advanta IRA's website and check out our events tab to see if we've got anything else coming up that you have interest in. Go to our YouTube channel if you want to check out any of the videos that we've referenced today, or even this video will be posted tomorrow if you're here watching live and you'd like to watch it back. If you have signed up for this webinar, you should receive a recording emailed to you tomorrow. And if you're interested in industry-specific news, like when we were at the turn of the new year last year and the Build Back Better bill had some information about restricting our industry, we were at the forefront of getting news and information like that onto our blog and out there to your attention. So feel free to check out and sign up for our blog if that's of interest to you. And we will be happy to keep you informed and up to date with any self-directed or retirement investing news. I see a question just came in. If I get a K1 loss in my traditional IRA, does it apply the same way as our regular non-retirement accounts? Not necessarily. Profits and losses don't necessarily apply in retirement accounts the same way because the traditional IRA is a disregarded entity for tax purposes. So really the tax shelter that you'd be getting for a non-retirement investment is kind of mooted by the fact that you're making this investment in the tax sheltered account. Larissa, I see a second question there as well. Do you want to take that second aspect or second portion?
So then the second portion of this question is asking if they can carry the losses forward, essentially. And the answer is possibly. I really can't answer this question because I'm not a CPA, but I could definitely refer you to some CPAs that could help you with it. But in the event, let's say that you did have UBIT, then that would potentially be where you could offset some of the UBIT tax. So remember that tax we talked about a couple slides ago? You may be able to offset some of that tax liability with losses, but that definitely would be a question for a CPA. And, you know, honestly, it would be a question for unique to a CPA that's familiar with unrelated business tax, because I'm not 100% sure that you could go to just any CPA with that question. You would definitely want to speak with a CPA that's familiar with unrelated business income tax. So in the event that the IRA does have tax liability, which is very rare, then it might be possible. And again, that would definitely be a question that you would want to talk to a CPA about.
Yeah, thank you, Larissa. And as I mentioned a few times, we are experts in knowing what you can and cannot do within a retirement account. We're also experts in knowing what we can and cannot answer, but we do have these referral sources to help you and point you in the right direction. So whether it's something like this that we can't necessarily answer in the moment, we at least know the next steps that you should take. And again, Larissa, I appreciate you providing that answer for that question. And in closing, before we display our contact information and wrap up, I do want to let everyone know that we do host a bi-weekly networking forum called Pitch, Promote, Prosper. This is a Zoom session every other Friday. If I'm not mistaken, this Friday is a PPP Friday. So what this is a ability for you to jump onto a Zoom session and promote what you have to offer or what you're looking to invest into, network with our network of people, which is nationwide. And we even have some people sometimes sign in internationally that just have investments, have different perspectives, typically a shared train of thought in that, you know, diversifying and self-directed investing is a good avenue. But like-minded individuals with different walks of life and different perspectives meeting together, getting different things accomplished from an investment standpoint. You can check that out at our events tab, sign up, and participate as you wish. With that, I think we are ready to conclude. I haven't seen any additional questions come in. We'll go ahead and leave our contact information here on this slide for just another minute or so while everyone gets signed out. And again, thank you so much for checking out these unique investments with us, how to structure them, how you can utilize self-direction in your own world and investment journey and goals. And Larissa, thanks again for running this one with me today.
Yes, absolutely, Corey. Thank you. And we did have another question pop up just about the Zoom call. So if you go to advantaira.com/events, you will see it listed there under pitch, promote, and prosper, and you will be able to register and then join. So make sure that you do follow the link to register first so that you will receive the link to join, and we hope to see you on there. Thank you so much, Corey. This has been a great webinar. If anybody wants the slides or the recording, please let us know. The recording will go out to all registered attendees in the next day or so, but if you would like a copy of the slides, feel free to reach out to myself or Corey, and we will make sure to get them out to you. Thank you, Corey. Take care.
Thanks, Larissa. Appreciate you as always. And thank you, everybody, for joining us. Hope to see you soon.